Welcome, everybody. It's lovely to see you. If you don't know me already, my name's Lisa Basford. I work as a consultant. I'm self-employed, and I work in corporate social responsibility, specifically on social impact. So I work with corporates and charities on their social impact strategy. And earlier today, I checked my bank balance, and I was a little bit shocked and my well-being was significantly impacted, I think, when I saw my current status of my bank account. So today's topic is very relevant to me. I'm really, really excited to speak to Caroline Edwards today. Caroline is a leader in corporate social responsibility, and she heads up, let me get this right. She's the Sustainable Banking Lead for Financial Capability at NatWest Group PLC. So I think today's conversation, we're going to go and learn loads and loads about Caroline's leadership journey, but also want to sort of try and get an understanding of financial well-being. That seems to be a really hot topic today. But let me just tell you a little bit more about Caroline. She was born and grew up in South Africa. And like I said, she's now the sustainable banking lead at NatWest Group. She'd previously worked for RBS, Merrill Lynch, and the City of London organisation. So loads of really exceptional corporate experience, working a whole career that's in the city. NatWest Group itself serves over 20 million customers across retail, private, and corporate banking. And across the group, there are 60,000 employees. NatWest is one of the big four banks, along with Lloyds, Barclays, and HSBC, that dominate the UK market. And actually, they control around 80% of household deposits. So we are talking big business here. But also with that, I think comes big responsibility and big opportunities to make a really positive impact. So, yeah, Caroline, would love to hear a little bit more about yourself and how have you ended up in this on this choosing this career path?
Thank you so much, Lisa, and lovely to meet you all this afternoon. That's a really warm introduction. Thank you. One thing I would say, I will answer your question now, but the one thing I think is always interesting for us coming from NatWest Group as we are today. When I joined it 16 years ago, it was RBS. And we are a very good example of what happens when an organization is unsustainable. So, we are the bank that nearly broke Britain. There have been books written about our catastrophic fall from grace at the height of the financial crisis. So I think in the group sustainability team where I sit, we are very conscious of the fact that, when you get it wrong, you can get it spectacularly wrong. And what does it mean to be sustainable? And if nothing else, it means your balance sheet stands up. So we have experience of not doing that well, but we're in a different place now, thankfully. In terms of my leadership journey and what got me here, I'm a great fan. I'm a great supporter of the squiggly career. So I think a lot of the work that we do now, and we have grads in the team and interns as well, is encouraging, especially younger people or new entrants to the world of work, that your career will change, and actually having a squiggly career, not doing the things you thought you were going to do when you left school or university, is okay. And sometimes taking that step off the path you thought you were going to be is what can define your career. And for me, that's what happened to me. So a lot of my career is more happenstance than by design. So I did, as you say, left South Africa. I landed in Lloyds of London in the insurance cargo broking world as a sort of young 20 something or other. I'm going back a long time, and I was this girl from Johannesburg with a funny accent on the broking floor, and I'm now the woman with the funny accent from Joburg working in NatWest Group. And I think for me, one of the things that I think stand up in my career is being different, and being different has been good for me. So sounding different makes you memorable, having a different experience makes you memorable. And it means you get to see the world from a different point of view. And again, we all know the importance of diversity in the workplace, and different diversity of thought, diversity of experience, diversity of all the things we normally, associate with it, I think is really important. My sort of career has also been shaped by being unafraid to to ask and being unafraid to take that left step, and do something different. Um, Most notably when I, had sort of moved on in my insurance career, and I got a phone call one day from my brother-in-law, and he said, "Would you like to run your own business?" I was like, "I don't know. I work in, corporate insurance." And he said, "Would you like to run a diving business?" And I went, "Okay." I wasn't a diver. I'd never run a travel business, and I was in London, and they were all in South Africa. And that was a sort of a real another step in my squiggly career to go and do something different. And we'll pick up on it, but the opportunity to leave a corporate role and go and run your own business, I think I leapt into it probably with less thought than I should have. But I learned a huge amount from that experience, and I learned a huge amount about what I don't want to do with my life as well. So I think where I have found myself back in a corporate world, this is where I want to be, and this is where I fit in the best.
I love what you're talking about there, Caroline, around being brave and that it's okay to be different. I wonder if you can talk a little bit more about that, like when you first started in the working in the city with your funny accent. How did you know, and being a woman, I guess, as well is interesting. Like, how did you make that work for you so that you were credible and taken seriously at the time?
Yeah, and I think it's a really good reflection, Lisa. This is going back to try and think I mean, it's over 30 years. It is a long time ago, and the trading floor in the city of London, well, the trading floor in the Lloyd's insurance market in those days. I mean, it seems bizarre to say, and I say it to younger colleagues, and they look at me like I'm crazy. They didn't even have computers on the underwriting boxes. It was very much you turned up, you stood in line, and we all queued there in person, waiting to see the underwriter. And by the time you got to the underwriter as a broker, you had a minute to explain to him what your piece of cargo was that you wanted insured, what the risks were, what the opportunities were, who else was on the slip, etc. So you had to pitch your business literally in a minute to someone who had seen it all before, asked really insightful questions. I was one of the very few women on the cargo broking floor, and certainly in those days, I think there was one person of color in the entire Lloyd's building as a broker. So it was a very, very different world. And you stood out. As a woman, you stood out. And as a funny sounding woman with a different accent, you stood out. So it made me realize when I get the 30 seconds in front of that underwriter, I need to know what's in my brief. I need to know everything about this client. I need to know what's going to work, what's not going to work. I need to know my underwriters. I need to know which one is going to lead the slip, and I need to know who will follow this underwriter. So it was all sort of honing in on there was a very important session you're about to have. Make sure all your prep is done. That
Mhm.
little bit of when you're doing DIY at home, 80% of painting the wall is prep. So before you turned up in front of your underwriter, you needed to do the prep. And a lot of that prep was by chatting to people in the queue. So the way we work today, there are fewer and fewer of those opportunities to have that. Oh, what do you think about that person? Who's the right person to go to with this in a sort of informal networking in the queues way that we did it then. And that was how you built your network. So building a network was so important. And you
Mhm.
did it by being brave and going up to people you have no idea who they were. And I got it catastrophically wrong on many occasions. Some underwriters were kind, some less so, but it was a good learning.
My walls look rubbish. I'm looking around my office here, and my walls look rubbish. So I think I need to up my eight, to get to 80% of preparation because I've clearly not done that. But what strikes me about the way you're talking and that kind of business environment is that feels like real high pressure. Short of time, you've really got to know your facts. You've really got to be on it. You'd have such little time to prove your business case and get what you need. And that feels incredibly stressful. And then you took this complete career change. And you mentioned, the diving holiday company. Like, can you talk us through that and like what have you learned from that experience? Because they seem to me like two completely different, unrelated careers.
They were nothing I had done up to that point actually equipped me to do the job. So I think that's the kind of thing, it is that when you're young, maybe you make dumb decisions. Maybe it was, it was a good decision in the end because that's how I met my husband. But yeah, I mean, the things I learned from that are, I would say this, but South Africa is full of amazing people. It's a beautiful country, and I really got the opportunity, to learn that and to be proud of that. I mean, this was the end of the 1990s. South Africa had had its first free and fair election, but it carried with it a history of not being the greatest country, not being fair, not being equal. And when I first came to South Africa, came to London, there were a lot of people who were still justifiably very negative about where we were. So it was an opportunity to feel proud of my country, which was great. The things I learned from running a small business that I was completely ill-equipped to do was, for me, don't work with your husband unless you can take instructions from him well. Wasn't the best thing for us. We made it work. We ran a great business. I didn't like him telling me what to do. So over time, when it was the opportunity for me to move into something else, it was like, oh, thank you. I'll grab that with both hands. Um, I use an analogy if I say I learned small boats are not for me. So we had great fun. It was niche guiding. We were with people for 14 days, and we did everything. So you learn to be flexible, you learn to be decisive, you had to make all the decisions, you had to fix everything when it was broken. And having worked there and having worked in various size organizations, I'm happier in a bigger firm. I'm not a small boat person, I'm an ocean liner person. Harder to turn around, many more layers, etc., etc. But that niche flexibility is great. But I actually felt that pressure of everything was on us. And I like being in an organization that has a legal firm. It has legal side, an accounting side. Otherwise, you're doing everything. So for me, I found that quite stressful. I think one of the things I gained from it, which really is a bit of a theme in my career as well, is about the customer. You see the whites of your customer's eyes around the campfire, and if they've had a bad day, they tell you directly. And I know now, whenever we're interacting with an organization that's invariably digital, you do a transaction, the next you get an email, tell us how we did. I'm like, go away. I don't want to keep filling in a survey telling you what it was like to buy a pair of shoes from you. But when you're running a small business like that and you're face to face with the customer literally for 18 hours a day for 2 weeks, you really get feedback. And it was a way of learning, actually, how do I hear my customer? I'm trying to give them a good time. There is jeopardy in a diving holiday. If the weather's awful, the boat's not launching. You've got 14 people staring at the sea going, what are you going to do with us today? So, you need to be able to be a great customer service. You need to understand your customer, all the things that we use, every day in the bank now. And I also realized I needed to know my product. So when I first became a co-owner in this business, literally was a phone call from my brother-in-law. Had I ever dived? No. Had I ever been launched through the surf in a boat before? No. Did I know what all the fish were? No. Had I dived with sharks? No. But I had to sell it. So the best thing for me was I had to immerse myself in the world very quickly of diving with sharks. Now, most people who aren't divers will go, are you crazy? But that's actually what divers want to do. And when I was told, you're going to go to that dive site, that's where the tiger sharks are, not the tiger, the raggy tooth sharks are, so you can sell the product. I was like, this is madness. But actually, that deep understanding of what your customer wants, they all want to know what it's like to dive with sharks. Over you go, Caroline, get down there and experience it. So understanding my customer, knowing my product was really, really important. And, I took away with that. Obviously, it was brilliant. I had some of the best experiences in the world. We traveled all over with the business. I met people from, many different nations. You soon realize which customers are up first waiting at the boat. The German ones, that I know that is a generalization, but they're up ready to launch, and some of the other nations not so much. And you have to get everyone ready at the same time. So, that was, I learned a lot from it. I loved it. Um, yeah, and I learned what I don't want to do.
Mhm. And in in some respects, Caroline, we've had similar careers because I mean, I work for myself now, but I've worked for big corporates in the past, and I like the way you talk about sort of like you're a corporate girl in a way, don't you? You've kind of found that environment where you've got the legal team and the tax team and HR and IT support and all that on hand is good for you. That helps you to work better. But I guess I'm wondering if because of that experience of also being an entrepreneur and running your own business, perhaps that makes you more appreciative of all those other people, like you're in it, you're a team together in it together and how, you all collaborate together, I suppose, to get things done.
Yeah, and it's very much you learn delegation skills very quickly. So we had a small team that worked with us, and who do you phone when there's a flat tire on the
Hmm.
we call them a bucky, a pickup that launches the boat. You absolutely know who to phone. But you also need to know what are the skills of your team and how do you upskill people that don't have those skills.
Hmm.
And we were working in an environment with people who had not finished school. So it was very much about, right, how do we upskill our team so we get the best out of them? And that applies anywhere you work. You need to know how to get the best out of your people. Um, you know, so although where I am now, I don't need to know how to fix everything, but it is about how to get the best out of your team, and how to share the load and also how to muck in. When
Hmm.
there is a flat tire and I can't change the tire on the bucky, I know to phone Isaac, but I absolutely need to be there to help him.
Hmm. Hmm.
That's kind of also showing leadership is not just delegating everything to Isaac and then disappearing to have a shower. You need to be with your team.
Hmm. Yeah. So let's fast forward now, come back, back to present day, and you're now in charge of financial wellbeing at NatWest. What does that actually mean? Now, it's a term that I read about in the media. I see it in my socials. People talk about it a lot, but when they use that phrase, financial wellbeing, like what does that mean to you?
We always say CSR is the discipline that spawned 1,000 acronyms, which is true. And I think sometimes around financial well-being, we've also spawned a number of different ways of talking about it. And you'll hear terms interchangeably: financial capability, financial well-being, financial literacy, financial education. It all means people having a good relationship with money.
Hmm.
And it does, and also, yeah, so it's having a good relationship with money, and how we interpret it at NatWest, how I run it in the team, is it's about people feeling secure and in control. So being able to understand and be in control of your finances. It's making the most of the money you have day to day. That will vary for everybody. It's about being able to deal with the unexpected. We all
Hmm.
have life shocks that will impact our money, and how to be on track for a healthy financial future. So
Hmm.
it's the whole life of someone in their relationship with money. And so the role of our team in the bank is to understand, how do we help our customers to become financially resilient? It's really important, as you mentioned earlier, confident and empowered to make the decisions that are important to them.
Hmm.
And for everyone, it's different.
Hmm.
I always say it's not about how much money you have. One of the arms of RBS is, one of the divisions is Coots. So we have, some extremely high net worth individuals. They also can make mistakes with money.
Hmm.
And often the other aspect about financial well-being, which I find so interesting, is it's about the emotions that are associated with money. And I asked you earlier, Paul and Anna, is the audience for this call international or UK? Because you can make assumptions and generalizations about how different communities manage money. But in the UK, it's generally accepted we're very bad at talking about money. And if any of you have, friends or traveled in the US, they're far more open in asking about money, discussing money. they have a very strong investment culture. They all talk about the investments that they make. In England or in the UK, people don't talk about money, and it's very much a generational thing. So if your parents don't talk to you about money, there's a good chance, and it may be that they also don't feel equipped to talk to their children about money, and then that impacts the next generation's confidence
Hmm.
in talking about money and also knowing where to go for help.
Yeah.
And we find curiously the bank is often the last place people will turn to for help, especially in times like we've been experiencing sort of rolling cost of living crises. We're the last place people will come for help, but actually we are one of the best places to go because we are the organizations that can help move things around for you. So it's about your relationship with money and understanding the emotional impact that that has for people.
And it's so interesting, isn't it, that people that the bank is the last place that people go to for help. It's almost like there's a stigma associated with that, or maybe a sense of shame that you're not able to manage your money, or there's sort of maybe a bit of embarrassment around that. I mean, I love data, Caroline, so I read this, and I can't, forgive me, I can't remember if I read this on your website or if it was just in a separate piece, some separate research, but according to a 2025 survey, 46% of UK adults do not feel confident managing money, and over 52% of us struggle to keep up with financial commitments. I mean, they are really scary numbers. That, I mean, effectively, we're saying that half of us just are
Mm.
not, don't have that confidence or that resilience that you talked about. Um, I've seen a lot. I saw something yesterday in the news about three-quarters of us, and we don't have enough put aside for our pensions. I mean, that's terrifying, that we're not able to have even on track for a moderate pension income, which is, it's not saying we want to be cruising around the world in our 80s, but really we don't have that sort of knowledge, acumen, um, or even perhaps even prioritizing it? Or is it something else? Is there something else? Is it the state of the economy that we just are not able to put money aside at the moment? Or in fact, somebody's put a question in the comments here about, is it a fear of approaching banks? Or what, I mean, is our relationship with money getting worse? Or are we just more aware of the issues?
I mean, it's interesting. So your stats are bang on, Lisa. So there is an organization called the Money and Pension Service. So they're kind of a quango, and they are the holders of the strategy for financial well-being in the UK, and they do a set of research every year, and the figures come from that. The figures are fairly static. There are minor increases, so people are saving slightly more than they were a couple of years ago, but the figures are pretty stubborn. So despite everything Money and Pension Service is doing, MAPS is doing, the FCA is doing, banks are doing, in many ways, it's not changing. And there was a whole debate over this, and you know, maybe not one, to sort of solve here, but the middle class is getting squeezed, and people on low incomes are definitely getting squeezed further and further, and people are not earning enough. Incomes are not keeping up with rising costs, pretty much across the board. And I can remember feedback we got from Citizens Advice, who we did some partner work with at the height of the last cost of living crisis. They were saying families, where the family income was 50K, were coming in really struggling to work things out, just because they did have outgoings that they couldn't keep up with. So, families on low wages are really struggling,
Mhm.
and even families on what would have been considered a medium salary, they're battling. So it's a number of things. I think the low wage, I think wage suppression is definitely one of them. I mean, the question about people coming into the bank, it's interesting. I think there is that fear of they can see all my mistakes. Why would I talk to them? I mean, I think that definitely is a perception. We've just done a piece of research, some really interesting insights with young adults between 18 and 25 from low income communities on getting their take on money, their attitudes. They gave us we call like an inclusive design panel, some critique on some of our products and services. And of course, they live their lives digitally and they all follow many influencers. And there's a whole span of them called finfluencers now. And they will take investment advice from someone on a TikTok video, but they won't necessarily go to a bank to ask them, how do I manage my credit? How do I improve my credit score, etc. Mm-hmm. So I think that it's almost, I say, the democratization of access to information about savings and especially investments. Young people fascinated by investments. As I mentioned earlier, the UK doesn't have a strong investment culture. We have a house buying and a savings culture, mm-hmm. not a strong investment culture. This, of course, is a mass generalization. Whereas in the US, people invest from an early age. And the government is trying to push people to do more investments now. But because it had always been a bit sort of the stockbroker, smoke and mirrors, don't really understand it. Now that it's available digitally and there's videos on everything, young people are fascinated by investing and they ask us loads of questions about investing. And we've kind of had this debate at work. Is it better for young people to get involved in investing when they're younger? And there is the threat of losing it all, or the opportunity, the risk of losing it all. But they don't have lots of those heavy bills that those of us with mortgages and school fees and children and all of that to pay for. Whereas you need to make more balanced investing decisions when you are in your 40s and 50s. But maybe when you're in your 20s and you save £1,000 in an investment account and you lose it all, it will feel tragic, but you won't lose your home. Mm-hmm. So there is this interesting conversation around at what age should we be encouraging people to think about investing.
Yeah. And that's a really interesting point you make about how young people are getting their financial advice from TikTok or social. I'd not heard that finfluencer. I'm going to use that from now on. They're finfluencers. I've not heard that before. But Therese has asked an interesting question about, because it strikes me that if you're getting financial advice from TikTok, how can you trust that? I mean, that could be anybody telling you anything. It's not necessarily safe, or they're not necessarily that knowledgeable in that topic. If those people were to speak to a bank or a financial advisor, then you're getting, I guess, more trusted advice. But how does the fact that more and more people are doing their banking online, are you seeing that impact and I don't know if you measure, I assume you do, like your reputational scores or, trust with your customers as the banks are close. Because, obviously it makes sense to close some branches from a cost perspective and because the market is moving digitally, but at the same time, you lose that face-to-face connection, that personal connection. So how do you keep the trust and still keep up to date with moving digitally?
Yeah, it's a good question, and I think, that, as we said earlier, the world is changing at a rapid rate. And I think there is generally a high level of trust in digital finance. If you think about how many of us on this call have got Apple Pay, and, we trust that we're going to tap our card and that's all going to be managed well by the phone. And that means Apple's software, because it's their phone, and it means their interaction with the bank and with the supplier. So we all trust that. So there is that trust that we all place in the mechanics and the technology that's managing our money. So I think that level of trust is quite high. It's when it becomes more complex situations. So if you're doing home ownership, or you want to take out a loan for your business or that kind of thing, where it's perhaps less, it's not just the transactional stuff, it's more complicated. That is when people look for a more detailed conversation. And those are had online. So all banks now will have you can speak to your banker on a video call like this. So although the bricks and mortar is definitely declining, in some areas, some of the branches are getting busier, which I think is interesting. I think there was a big swing to digital because it was easier. You didn't have to, in your lunch hour, walk down to the bank. You just get stuff done. But I think for more complicated or more complex transactions, people are preferring bricks and mortar, or they can do it face to face. So I think it's not going away. And there is that line in banking between advice and guidance. So we can give guidance on things like how you manage your money, but we can't give you advice. And all frontline, as we call them, colleagues that deal with customers directly, that line is very, very clear. I think the other thing that we've done, which is a little bit picking up on the trust, is we created it in my team, and it's been spun out into our retail branch banking, which I think is super positive. Is we've had two sets of programs. We had a financial education program in schools, which it delivers to 1 million young people a year, which is fantastic. And as a result of that, people kept saying, where is your financial education for adults? So we created a series of workshops initially for young adults, people new to managing money. But actually what we realized is across the lifespan, people's ability to manage their money changes. I always think of money management as a bit of a snakes and ladders. You might be doing really great now, and then something will happen, and we tend to call it a life shock, and you've kind of slid down the snake again. So it could be a bereavement, you could lose your job, you could, ill health, any number of things can happen in your life, no matter how old you are, how much capacity you have, shocks happen, and you're having to pick up the pieces again. And we had a colleague internally who wrote a fantastic story for us on the back of our workshops. He worked in the bank. His wife managed all the finances. They separated and got divorced, and he realized he didn't know how to manage the money, his personal finances. And it was very, sort of open disclosure on his part, but it can happen to anyone. So we created these workshops that we started delivering to externally. They are currently, it is a slight stricture on it, but they are delivered in person because we do believe face-to-face conversations about money opens up the way people respond to it. Obviously, if you want to scale it, you need to find another way. But what became really interesting for us around that is where we started to get pick up with people being interested in the workshops. And this goes back to some of the stats we have, which you alluded to earlier. Is if I said to you as business leaders, 52% of 52% of employees in the UK say worries about money negatively impacts their productivity at work. As an employer, you'd go, what? 52% of my employees are so worried about their finances that they're not performing as I expect them to. I need to do something about this. Or what can I do about this? So as a result of that, we've got a number of our corporate, especially our mid-market clients. We deliver financial foundations workshops in the workplace. And many of our corporate clients will create the time and space for their employees to get together in a workshop for an hour and a half with a representative from the bank, because they see it is that safe space. There's 10 of you in a room, you're having open conversations, and it improves the way people feel about it. So I think that trust comes from having conversations, knowing where to go, and many employers are creating the opportunity for their staff to be able to understand more about how to manage money. So I think the trust thing is very important, but we need to be proactively doing things.
Yeah. I like how you've moved us on to talking about some of the practical things that you're doing. I want to find out a little bit more about that, actually, some of the programs and the partnerships that you're leading, which are going to obviously help build trust with your customers, but also help improve, people's relationship with money. But there's been a comment from Sam in the comments, and it just really made me smile because it just relates so much. But the best parenting decision I made was giving my teenagers a monthly allowance to help budget. Still disappointed at school that they don't learn more on mortgages and interest rates, etc. I kid you not. So my daughter did her GCSEs last year. I mean, it was pointless me looking through any of those GCSE textbooks. I could not understand any of the maths in it, any of the maths in it. But what I think would be invaluable, exactly like this, is for somebody to say to young people today, what is an interest rate? And what is the impact if that interest rate goes up or down? Or, how do you do a weekly budget, household weekly budget? Because one day you're going to be having to do that yourself, right? And they're not, it's we're not learning those skills at a young enough age. And is that leading to us now as adults feeling nervous about money, ashamed that we've got into debt because we didn't know that I had to budget for, my rent was going to go up next month and I didn't budget for that. And that kind of I mean, I'm interested to get your perspective on that, but also to understand what the organization, what your bank is doing for those younger customers who are growing up in this sort of like, it's because it feels to me like managing your budget is not just, that's not just maths. That's a life skill. That's and we don't seem to be supporting that through the education system. But what can you as a bank do to help with that?
Yes, a couple of things. I just want to quickly comment on Sam. I just want to make a note on Sam, I applaud you. And I'm so boring with all my friends because I always say to them, it's not about how much you give your children, but you have to give your children pocket money. If it's 20p a week, it's fine. It's not about the amount. It's about, there's three things. One, you have to give them pocket money. Two, there have to be rules. So the rules doesn't matter what they are, but the rules can be you need to save half, you need to spend a third, and you can blow another whatever's left of my terrible math here to show myself up on that. So long as there's rules. So you give them money, you give them some rules, and then you leave them to make the decisions on how they spend it. And I guess it's not about the amount, whether you give them £1 a week or £200 a month, doesn't matter. That gives them the ability to learn those things. And I always say, and I joke about this, Naya will know, with my husband, it's about needs and wants. And this is a thing you need to teach your children from a young age. What's a need? What's a want? My husband seems to think, an Apple Mac is a want. I mean, is a need. No, it's not. It's a want. But it's about making sure that young people start to work out the differences between what's important and what's essential. What's essential, what's nice to have. It's about having rules so that they understand how to spend their money. So starting from a young age, there is research that was done by Cambridge University. The children's money habits are set by the age of 7. So even if they don't actually get money themselves, they are living in households where they have already worked out money is or isn't a stressor. Money is a topic of conversation we can or can't have. We have enough, we don't have enough. Things are expensive. So they've already worked all of that out just by being in the family. So they learn from a very, very young age. People will often say, at what age should I start teaching my child about money? Young, 5, 7. That's the age to start. And even if it is just the needs and wants conversation. And I said the best thing to do, and we did a series of work, we did a sort of a video on it as well, where we gave the household budget. I got some parents to give the household budget, the weekly shop to the children. It's like, right, here's the whatever, £100 for the weekly shop, off you go. They all came home with frozen pizzas and this and that, next thing, but there was no toilet paper, And that's a way of helping give the children the responsibility to make those decisions themselves, because that's what sets them up for later life. And what we hear from teachers a lot is they don't understand the value of money, young people today. And that is the sort of thing where online they will see, the influencer in Dubai, in the Ferrari, hanging out at the beach bar with whatever. But they don't understand how much money you need to earn to pay your taxes, to pay all your living costs, and what's left and what's discretionary spend. So they are seeing a world that looks like it's easy to have. They
Hmm.
don't understand what that costs. And then another step beyond that is they don't understand the jobs they need to have or what jobs will earn them the income to be able to have that life that they think they aspire to. So there is this huge gap in the education system and in conversations at home. So much can be done at school, and the rest needs to be a conversation that's had at home as well. And as you said, in the UK, people just don't talk about money. We know a lot of it is because parents feel they feel they themselves either aren't equipped, can't articulate it, or they are embarrassed about their own financial position.
Mm.
But
You know,
all
I
of
can
this is not
draw.
about how much, it's about the conversation and it's about learning the habits.
Yeah, I can draw so many parallels here with digital well-being. So, Karen, I used to work at O2 and head up their social impact team. And obviously we worked with the NSPCC and Young Minds, and we did a lot of research and work around young people's digital habits. And again, the research would tell us time and time again that you really need to be having a conversation about healthy digital habits younger. Yeah,
Mhm,
because um, if you just do the parental controls, which is obviously the online safety aspect, if you just keep your kids safe, that only helps to a degree. Actually, what you want them to grow up into adults who have a healthy relationship with tech and are using tech in a responsible way. And
mhm,
of course, my age, are the generation where I didn't grow up with tech, so I don't understand it as well as perhaps I should, or you kind of just like turn a bit of a blind eye to it. So you have this whole generation of parents who feel uncomfortable with tech. The kids are on digital devices and stuff, and they're not having that conversation about what does it look like when you're having that healthy relationship with tech. And it sounds so much of what you're saying about financial well-being. It sounds so similar.
mm, mm. And
Gordon's put a comment in the chat which has made me laugh. There's two types of people, those who understand compound interest and those who pay compound interest. That's made me laugh. Um, and there's a question, Caroline, for you from Mark. He says banks have become more impersonal since the late 1980s through consolidation, centralizing services, and the selling of products. Um, and therefore, that's created this situation, I suppose, where there's been a lack of trust, perhaps, in banks. So, could you talk to us and tell us a little bit more about what you're doing to change that? So, you talk about sustainable banking and this having a sustainable approach. What does that mean,
mhm,
and how is that helping people on a personal level?
mhm, mhm. And Mark, you're so right. I mean, my mother is 95 and she still can't believe she's English. She lives in South Africa. She's finally got it, but for years she couldn't understand why she didn't have a personal bank manager anymore. And I was like, Mom, so the world has changed so much. We don't have those immediate contacts, and so and I think that applies across the board. It's not just banking, it's our shopping experiences, everything. So we have got this much more impersonal relationship. So what do we do? So in terms of financial well-being, and also touching a little bit, Lisa, on a sustainability strategy, or how do we view sustainability, of which the financial well-being part is one of it. I think what we've observed, or what is apparent with where sustainability is now. I said earlier, we are the bank that shows what it is when you're unsustainable. The sort of we always talk about the evolution of sustainability, and those of us who've been in the sector for a while will know, 15, 20 years ago, 25 years ago, businesses were philanthropic. They wrote checks out to various, often charities or projects or whatever, and they paid for stuff to be done, which is great. And then it was realized, well, actually, how do we do this with our employees? So it developed into what we would call corporate community investment program where you would still write out checks. You'd probably partner with a number of organizations. You would make some strategic decisions, not necessarily, and you would involve your colleagues. And that developed. And then it sort of became more towards what we would call corporate social responsibility. So how do we look at everything we do as a business, and how do we make sure we are responsible in terms of our impact on people and planet and place, and how do we, make decisions that take those into account. And sort of where we sort of see ourselves now is we've moved on a bit from that now, and you will hear it's spoken more about sustainability. And where we are at NatWest is we sort of had a sustainability strategy, and the decision was that was felt more like something we would put on top of the business strategy. What is the strategy of the bank? And then there was this sort of separate thing called our sustainability strategy, and we've undone that, and we now have the bank strategy, and we try to make sure that being sustainable is baked into everything we do as part of the bank strategy. So we no longer have a separate sustainability strategy. We no longer have a separate sustainability report as part of our end of year suite of reporting materials. And what we have in our bank strategy is the sustainability element of it is we do two things. One is we help build better businesses. So very much looking at our commercial enterprise side, and we help people manage their money well and plan for the future. And that needs to be baked into the way that the retail, from a financial well-being point of view, in the way that retail delivers its products and services for our customers. So it's no longer about we will just do the stuff on top and we will have a partnership with an organization. And that's what we mean by being sustainable. It means how in the delivery of our products and services are we making sure we are helping customers manage their money well? And what are the steps that we take? Now, we also recognize in lots of organizations, I don't think we're different to anyone else, they're what we call the sort of broken windows factor. So where are the elements in what we're doing and the way we are managing our customers where there are broken window panes? It's awful for everyone. It always looks ugly. People get snagged on it. Let's just fix those things first before we do lots of kind of the painting of the outside of the house and make it beautiful. So a lot of what we do is what are the snags that people have around their relationship with money that we can just try and fix. So we do a lot of that work. And, in thinking about questions or answering your questions on sort of my role and where I find myself now is I always say the work of our team is what we would call leading without authority. I don't have the authority to change any of the retail processes. I don't sit in retail. I don't have the budget. I don't have the team. But boy, can I be annoying. Maybe it's not annoying. Maybe it's about maybe I can be encouraging, or how do I influence with grace? But if we spot things or we know these are issues that people are experiencing around their financial lives, how do we work with our colleagues in those teams and encourage them to change? So that's sort of leading beyond authority. We have a phrase internally of being a trusted advisor. Is how do I know I've got really good data and intel? How do I understand customers' lives really deeply, and then work with the franchise, the teams that are building the app, the customer journey, the products, etc., to help them make sure that they are able to navigate their financial lives better. So that's kind of what we do at a sort of very high level, rather than just having a strategy. The practical things we have done are we've had a financial education program. We've been doing it for over 30 years. So I'm not sure if it was Sam or someone said, they need to have financial education in schools. You're right, they do. We've been doing it for a long time. One of the challenges is it was not on the curriculum. So you get pockets of schools that really understand this is a life skill. They teach it, but it's not on the curriculum, or it wasn't on the primary curriculum, and it's not part of an Ofsted inspection, etc. Happy to say, ourselves and many of the other banks have been lobbying for years. And as of November last year, it is now on the primary curriculum. So, yay there. And we are working with the Department for Education on what the curriculum would look like. So many of the same issues that parents feel, I don't know how to tell my kids about money. Teachers are going, I don't know how to teach kids about money. So there is a lot that needs to be done. Curriculum time, training of teachers, getting, the resources and everything together. So lobbying is an important part of what we've done. We've finally made inroads, and we still have Thrive, our financial education program. So we deliver that. I've mentioned financial foundation. So we have our adult program. It's busy adding an investment module just at the moment. So that's hot off the press. So it's about teaching people basics, where to go for help, how to build what we say, your rainy day, how to build your umbrella for when things are hard. And we've added a module on investments. So that's being delivered and being rolled out. We have an ambition to reach 50,000 people this year with those workshops. So that's great. Other things we do more at the sort of delivery of our products and services is something is run out of retail called an inclusive design panel. And it is run by a partner organization that we work with. And they have a panel of, I think it's 5,000 people. And if they will pull together a cohort from that panel, and they will put our products and services, we'll run it through that panel. And we will ask, so it's very much a kind of lived expert set of questions on, what do you think about this credit card? How do you understand how it works? What about the marketing? What questions would you have? So we really try and involve our customers and non-customers in the development of products and services so that we get really good feedback on whether it works, whether it doesn't work, etc. So those are just some of the very sort of quick things that we're doing. I'm just conscious
It's
of
really
time.
good, Caroline, to hear those practical examples, because it kind of helps to bring it to life, I think, to show what you're actually
Yeah.
doing.
And
Because so often you read sustainability statements or CSR policies, and it's quite clearly just been written by somebody brainy in the corporate comms team. You've actually got to do it, not just say it. And I liked the phrase you used, a really clever phrase, influence with grace. And I really like that because I'm kind of, big business, if you use the term big business, that's not normally a compliment, is it? And banks in particular, perhaps you would say get a bit of a raw deal, perhaps justified, perhaps not justified, but in terms of, they're just seen as there to please their shareholders and, pay their CEOs, big salaries. And, they're not, you don't automatically think of a bank when you think of a business with a social purpose, for instance. So it's really interesting to see your case studies. So I'm quite intrigued to know how you, given that big corporate world that you're in the city, in one of the big four banks, in a regulated industry, what does influence with grace look like? Like, how do you engage your stakeholders to make that happen? I would really love to hear some of those stories, like how do you actually do that? Like, can you give us some practical tips for influencing in your line of work?
I mean, I get it wrong a lot of times, I'll tell you that much. No, I think one of the things that, sort of as a reflection on where I am and where we want to go is, like I say, we don't have the levers to pull. So we absolutely need to be able to influence our colleagues that do. And what's also true is, and maybe I'm sort of slightly hesitating and reflecting now, is also what I'm very conscious of. I don't want to sound like an old person, having worked for so long. But at the moment in business, the cycle of a CEO, and I'm not saying this specifically about NatWest, I think it applies to everyone. The cycle of a CEO is 5 years. And we have a lot of change in our organization. The world is moving at a fast thing. We've said it already. AI is coming down the tracks. Everything's going to change in the way it's delivered. And the cycle of change is so much, it's quite hard to get people's attention on issues. And you can come up with brilliant activities, and then, in 2 years' time, there's all change at the top again, and, everything changes. So it's you have to be quite resilient to keep driving your things forward and also recognize the organization that you're working in is changing all the time. I mean, I've been here a long time and it's not the same place. So Yes, and so yeah, sometimes it can feel quite depressing because you keep thinking, I've made all these inroads, I've got this initiative to a point where people really like it. There'll be changes at the top, something will happen, and your sponsor goes, and you have to start again. So being tenacious is really important, and absolutely trying to embed it into the business case of the areas that you're working on. And I think it kind of goes back to what I said earlier about running a dive business. It's knowing our customers. So sometimes in an organization, whether this is or isn't true about NatWest, I couldn't possibly say, is this will be the strategy, but the customer's life experience is here. And sometimes those things aren't always the same. And because I feel so passionately about we need to help everyone to get good skills and to manage their money well, how do I bridge that gap? So I need to know my customers really well. I need to know what their pain points are. And I need to know, young people have told us, interestingly, they're deleting Apple Pay from their phones because there's no friction in them spending money anymore. Like, yeah, that's so true. I used to have to take my money out of the piggy bank. There's loads of friction and all that. You've got to carry the money. Those days are gone. They're all just spending. But we're starting to get feedback that actually young people are finding that they recognize that it's bad. So how do I take that information into knowing what the business strategy is about accelerating digital payments? How do I turn up? So I need to know my customer really well. I need to know my pain points. I need to know who my allies are, and it changes a lot. But it's about finding allyship in the organization. And sometimes it's about knowing when to let things go. If you're not winning
Yeah.
that argument, there will be so many more. Um, and yeah, it's, and I think for us, it's building a really good team. There's the whole thing about always hire people smarter than you. And I know that's always people question whether that's a good thing or not a good thing. For me, it's always worked. I've always hired super smart people. It's about watching them fly and letting them go on to do great things elsewhere. But it's for me coming back to leadership. I have no ego personally in my leadership. That's just how I am. But I really want to be challenged, and are we doing the right thing? And so I've got really smart people in my team that will challenge the way we do things. And I'm really open to we do things differently. It's not just the way I think it needs to be done. Um, so it's about to try and answer your question, coming back to it, how do we show up to the business? Do we understand their business case? Do we understand their drivers? Do we understand their customers? How is our suggestion? Because I want to improve financial well-being. How's it adding value to what the business wants to achieve? And have I got the right data? And have I got the right supporters and stakeholders behind me? Sometimes you bring in an external person,
Yeah, yeah.
charities and civil society have no problem telling a bank what they're doing wrong. So sometimes it's also about finding the right allies outside to come in and support what you're doing.
Yeah, yeah. And I totally see it. Allyship, finding the right partners, building a great team, which you've clearly done, and being resilient, I think is, you've used that word a couple of times actually, and I think that's very key as well. If you work in corporate responsibility, if you work in social impact, a lot of what the kind of work that we're doing is long term, life changing, but long term, and you're working in a business that wants results quick, right? And there's a target to hit next week's target or the week after or whatever, or have we hit June's target or whatever. And actually what to build financial resilience, like you talked about, or education, that's long term. And it's hard to,
Yeah.
you've got to try and balance that long term with the short term commercial business needs, haven't you? But I think you've given us some really good examples of how big business can also be good business through the work you're doing, and Mark's put another comment here about the education piece and the lobbying within schools, because I agree, getting curriculum change, and because I'm trying to do that with a project that I'm working on at the moment, that is huge,
Mm.
but massively influential. And it takes me back to there was another marketing kind member. So years ago, I used to work for IHG hotel company, and somebody was applying for a job there, and they were part of the marketing kind community. And we had a chat, we had a phone call. And she said, "Oh, but I want to work for a purpose led business. I've always imagined I'm going to go and work for a B Corp or a social enterprise. So that's kind of put me off applying for this big corporate role, and how did that sit with you, Lisa? Because you work in, so, how do you mix the two? And I'm kind of like, well, the thing about big businesses is, they are there to, they have to deliver returns for their shareholders. But equally, businesses are becoming more and more attuned to what the benefits of being sustainable, listening, like you say, to your stakeholders, not just your shareholders, and
Mhm.
doing the right thing. Because we know, intuitively, even we know that it drives it drives employee engagement, it drives engagement with your customers, it helps to build your reputation, all of that good stuff. And I remember saying to her, look, you've in a big organization like this where you've got, you know, 300,000 employees and what have you, you could make you can make a impact at scale because of
Mhm.
the
Mhm.
size, because of the number of customers you have, the number of brands you have, the number of employees you're going to engage with. So it can be quite narrow to think that you can only do good by working in a B Corp or, a community interesting company or something like that. I'm not saying that all big business is good business though. You've got some are better than others, clearly, and that's why you have all these ESG ratings to tell you either way, or, you have the best place to work reports or whatever it is. But it's really interesting to get some of those case studies and learn from you, Caroline, about what's actually happening on the coalface in your business and how you're driving that positive that positive long-term change. It's great to hear that. What are you most proud of in your career?
Um, what am I most proud of? Two quick things. What am I most proud of? I think the one, so when I first joined the central sustainability team, we had this school program called Money Sense, and it had been going at that point for about 20 years, or maybe about 17 years maybe. And it had just been floundering. It was, this was in 2010. It was on the back of the financial, or 2012, back of the financial crisis. The bank had no money. We were on the headlines for all the wrong reasons all the time. Anyway, and it was given to me, and I was told fix it. Like, okay, and I went into the head. Then was the head of comms, and I thought, okay, I've got to get him on side. So I went in and I said, what would make you most proud of this program? And he looked at me and he said, if you had the guts to take it out and shoot it. He said, it's a dead donkey. We don't need it anymore. And I left that and I thought, I'm going to show you. And so we set a target of reaching 1 million young people. And we got that 18 months ahead of target. So I just thought, yeah, I'll show you. You think this is an obsolete program that the bank runs, and now it reaches 1 million young people a year. So I was massively proud that we reached that million mark early and that I showed that individual it wasn't a dead donkey that he thought it was. I suppose the other small thing thing that I'm really proud of is we run an intern program. So we partner with an East London charity because we're very conscious in our line of work that we have great jobs. Lots of people want to get into sustainability, and it often tends to be the way the grad schemes run that people from more privileged backgrounds will find their way to our doors. So we run an intern program with a local charity that hires graduates from low socioeconomic backgrounds whose parents haven't been to university. They want free school meals, etc. And they come and intern for us for a year. And we've had, I think, 21 in the time that we've been running the program. And those young people have gone on to have fabulous careers. And I just think I'm really proud of. We've given opportunities to young people who would not ordinarily get a job in a city firm, and they're with us for a year and they go on and do great stuff. And I think I love that program.
That's great. Thank you. Thank Caroline. I noticed that Neil's got his hand up. So Neil, would you like to ask your question?
Hi, Caroline. I really enjoyed your talk. I think we must have probably danced around each other in the city a few times. I was a pioneer of user experience design at Barclays, Barclaycard, head of design at UBS, etc., etc. So I've been in that place asking senior members of the team to think about their customers and have those blank looks thrown back at me numerous times. But my question from understanding is around the culture, because I found that when I was working in financial services, if it wasn't for or the people inside the organization were pushed by the wrong metrics, such as, say, for one example, when I was at Barclaycard, we did things that would reduce late payments. But then people had meetings saying, well, we make a lot of money from late payments. Do we actually really want to reduce that? So you kind of understand that people are almost incentivized, not necessarily for their own benefit, not to do the best thing by the customer. How do you find within, say, a large, more traditional organization like NatWest that you're able to do that? And do you feel that some of the new startup banks are doing it in a way that you would like to? So who would you see as the one that's doing it best? Not to actually pitch the competition, but I'm interested to see kind of, what you feel is a positive direction for banking.
Yeah, and I think there's two things there, Neil. It's a great question. So, I think having been the bank that fell over, we are very conscious about behaviors and culture. And certainly, anyone who worked in banking in the 80s and 90s will know it was very target driven and very sales driven. And that is not the culture that we have at the bank anymore. I mean, the way that staff performance is measured is not on sales. I'm sure there's still that kind of competitiveness within teams, but it's not a measure. So I think a lot of that, I think the really bad stuff, I think those days are gone. Certainly in our organization, I get the sense from my peers as well. I mean, there will always be that tension, I think, if you work in sustainability or ESG with a revenue driven organization. I mean, that I think there will always be that. I think we do challenge. So when Buy Now Pay Later came out, everyone was like, "Oh, with this Klarna, we've got to jump on the Klarna bandwagon. We've got to have a Buy Now Pay Later product." And we absolutely said it's the worst possible thing. Do not introduce a Buy Now Pay Later product. And we launched it and it closed very quickly. And and I think that's because we lobbied not just our team but collectively a few teams. And what's interesting, what's coming out now is a lot of people are using those Buy Now Pay Later products for groceries. And they're not designed for that. They are a higher purchase product and they are designed for something like a sofa or a car. They're not designed for everyday essentials, but that's where they are and people are falling into the trap. So I think those behaviors and that culture still exists in some organizations. I think those of us who work in sustainability try really hard to look at the products that are coming online and have a voice on it. Some we win, some we don't. So I think that sort of incentive and culture pieces is really important. Sorry, I've forgotten the second part of your question.
It was more around, I guess, kind of you mentioned Klarna, but I guess the smaller banks, the Starlings,
Oh,
the
yeah.
Revoluts, who because they are doing some customer, I tried them out. I'm a Barclays customer. I am a Starling small business customer because they just do it really well. And
Yeah.
but it's really kind of, it would be interesting to hear from your perspective. Who do you think is kind of leading, or what kind of thing would you love to do? Because I know it's like steering an oil tanker when you're in a business like NatWest. It's so hard to make dynamic change. Which of those banks makes you envious in regards to customer service and sustainability?
Yeah, I think they all do things in different ways. And we do ask those questions a lot on our insight panels. And I think, and you're right, they're nimble, they're late adopters, they haven't got, I mean, this is a bank that was built on acquisition. So, for many years, it's sticking loads of things bits together. I think from a financial well-being point of view, the things I really like, I mean, I have a Revolut account. I think it's Monzo has a really good, where you can get a very good picture of your money on your app. And I think what traditional banking apps do wrong is if you open your banking app, essentially what you're looking at is a bank statement. Ingoings out, this is how much is in each account. income outgoing. What you're not opening, you're not looking at your banking app and going, I can understand how I'm spending my money and where I'm spending my money. You're just seeing what your balance is. So for me, and so this is not necessarily someone else is doing it better, but I think there is that sort of shift to how do you make your banking app be more, giving you more info on how you're spending your money and where you're spending your money. And have you got, setting up, lots of them have got pots. You can put pots for holidays, travel, groceries, blah, 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 and then you spend out of your pot. So it's how do you visualize for people the tracking and spending of their money so they understand their whole financial picture, not just how much is in each account. So how do you set a budget? How can you see whether you're over or underspending against that budget? And if you've got left over, is it automatically being transferred to a savings pot, for example? So I think all those sorts of features are ones we're looking at, we're trying to emulate. Some people do it better, across the board. So that more dynamic, personalized app rather than just a list of your accounts.
Yeah, no, it does remind me. I was responsible for my Barclay card, which introduced categorized spacing, and in 2006. And it does frustrate me that they don't do it anywhere near as well now. So, but anyway, but no, thank you. It's good to hear.
I'd love to know what you see as the future of engaging with young people on financial health. Are their tools working, in your opinion?
You ask young people what they want, they definitely tell you. So we got some really good insight from in the recent work that we did. They are all looking for personalization, which I think is correct. So from a financial education, well-being point of view, they want it personalized. And I think that sort of also answers your question, Neil, around how do the apps become more dynamic? How do you create your own, what your app looks like so you get the information you need is the one thing. It's about taking learning about money and good money management to where they are. So not this, oh, you have to come to the bank, you have to phone the bank, you have to go onto our website, you have to dial into our app. If they're at university, they're in youth clubs, they're at work. How do we take learning about money to where they are? So I think that's really important. They want everything in bite size. It does make me a bit nervous because some stuff's complicated and you can't do it all in 30 seconds, but they're looking for bite size dynamic information. So how do we create content for them that's dynamic, interesting, using young people as a spokespeople. So it's about engaging them in the process and designing products with them and the financial learnings with them, and then getting them to front it up for us. I think those are sort of the three quick things. But yeah, it's very much about involving them, personalization, and taking it to where they are.
Thank you. So we are out of time, but this has been absolutely brilliant. Thank you so much, Lisa, for hosting, and thank you so much, Caroline, for sharing your career with us. I think we can all appreciate your leadership so much. I think we all would enjoy being a part of your team or one of your allies. You make leadership look elegant and brave and brilliant. So thank you so much. And for everyone on the call, hope to see you next Wednesday at, I think it's 2 p.m. unusually. We'll be having Your Marketing Kind with Dr. Victoria Hirth on her book, Beyond Profit. And we'll also hear about her leadership at the Cambridge Institute for Sustainable Leadership. And then a couple of exchanges that are coming up that we're really looking forward to include July 7th with Joe Swinson, who's the former leader of the Liberal Democrats, and September 9th with Kate Pickett, who's the author of The Spirit Level and The Good Society. So hope to see you all again soon. And thank you again, Caroline. Take care.
Thank you for having me.